It's the weekly 30/30 trading list. We are finding the best momentum companies on the ASX and identifying the companies that are set to run, hopefully, next. We're with Gary Glover from Novus Capital, who has been through the list and picked out his favourites for this week. Good morning, Gary. How are you?
Good, Chris. Yeah.
I'm excited for this week because you've trawled through some of the questions that we've received from viewers over the last couple of weeks and picked out some favourite questions. So we might leave that to the end about managing stops and scaling in and out of positions. So when we look at the list, though, for the momentum companies, what's catching your eye on those top momentum stocks?
Yeah, pretty interesting list actually this week because I made quite a list here. So yeah, hopefully don't spend too long. So I'm going to probably try and rush through them all here. But yeah, a bit of a mixed bag sort of through there. But yeah, plenty happening. Probably more interesting the weekly list there. Quite a few sort of stocks starting to pop in there. Definitely some of you've seen a lot of takeovers coming through, like in that sort of small tech space in Australia. And there's a surprising section has also popped up this week here, which has got me interested as well. So there's quite a few stocks all in the same, another sort of small area as well. So before we might just sort of go through the quarterly momentum list there first. So Cettire was number 2. That's probably the one that sort of has had a pretty good run here. Probably getting a little bit long here now, but still not seeing too much signs of selling there, Chris. It's going up on pretty good volume, pulling back on light volume. Just starting to overlap a little bit now, so probably losing a bit of its momentum. So probably point to be a little bit more careful. ELO we talked about last week. And it's funny, actually, after we saw the ELO chart, the takeover there, we were talking about Nitro, which has come up on the list as number 4 here this week. So that looked quite good last week. Again, we talked about that, how it had broken
trade.
out. Yeah, so it broke out sort of on the 27th there, which is like breaking out of a Davis box sort of style. So that's, that's like a 6-month high there. So that's sort of something that, would have caught the eye. And then we've had a bit of a gap up here and take over there. But that's interesting because it's sort of a lot of sort of stocks are sort of, some quality Aussie sort of small caps starting to get taken out here. So that is very interesting. CAU is obviously one that was on the list for the last few weeks, been pretty firm here. Still not too much selling going on here. Just started to have a bit of a breather. It's gone sort of sideways, but it's still nice and tight in here. So that's sort of pretty constructive there. Not bad volume there. Pretty light volume, as we sort of said through the no real selling here so far. Volume up here, pretty light again. So still sort of still reasonably robust there. So yeah, showing signs. So that's CAU, if I'm not mistaken, is in that again in that biotech space, which is definitely a space in the States that's like a lot of the leading, a lot of the momentum traders in the US have been commenting about how many biotechs are in the leading stocks at the moment. So definitely a sector to be keeping an eye on. GLN was number 8. So again, had that bit of a gap up here, bit of a consolidation here. It's a bit hard to sort of buy that little gap up in there. You can see there's a little BCP in there, but it would have been hard to buy this one here. But some good volume sort of, so that doesn't look too bad, GLN. MAD was actually one that actually really sort of caught my eye just because it sort of had a bit of a breakout here. So again, this is your sort of Davis box sort of style here. So big breakout here. I mean, this is sort of quite a nice uptrend here, Chris. So over the longer term as well. So just a series of sort of high lows building here. So it's nothing too crazy or V-shaped in here, which is sort of what you want. So yeah, this is pretty interesting. So this is definitely stock showing relative strength in a bear market.
So they've had the tailwind of the energy sector because they're providing services to mining, energy, and industrials. How do you look at that? As in, you've talked about energy before being quite volatile, but this is kind of, they're getting longer term contracts and all the money that's being made.
Yeah.
Sort of a recipient of it, are they?
Well, the thing here, just look at the trend here. Just high, low, high, low, high, low, high, low, high, low. Just it has not broken a single swing low the whole year here. Just keeps, so, and also, I mean, that's probably the largest correction of the move in that middle of the year. But these are all small corrections and as well here. Nothing large in here. So you
So
always
no
get
real
your,
overbalance.
no. So you get the thing about when you break out sometimes here, you see this particularly more so on the US charts. If you sort of follow some of the US momentum charts, you see how they break out there. That people see that breakout and then they buy it, and then all of a sudden the next day it'll tend to flash back and knock people out of their positions, stop, so they get scared, and then they continue on again. That actually is quite normal to see something like that after a breakout. So that's why the pros will probably just, they'll just probe. They'll probably do a little bit here. They might sort of wait for a little flashback, see that, and it's okay. See if there's any follow through on that. After 1 or 2 days, no follow through, and then they might add to it there. And then they usually sort of stay long these positions here. That's how often they'll do it. So this is pretty interesting here to me. I mean, it's still, look at that, last 3 days, 1, 2, 3, no selling here.
Volume's
So
just not happening.
Yeah. So this is, I mean, there's sort of the suggest here that you're looking for the leading stocks here in bear markets. Obviously, the new leadership group will emerge. And also you don't want to see too much volatility. There's another stock on this list here, number 18, PWH, which is sort of similar in that it's sort of broken out. Yes, this is showing some relative strength again as well. It's a bit of a cup and handle in here, you might sort of say. So this looks pretty constructive as well. Some okay volume in here, though the volume is coming in a bit late. Not really sort of seeing volume driving this sort of through here. The big difference between this one and the earlier one is that what have we got here? We've got this big V-shaped overbalance correction. So that's a bit of a negative because so you can see the selling through there. See how the big seller there? And then we're rallying here, and we're just sort of saying the volume's a little lighter on this rally. But so you sort of just reading through sort of the winners of the past, the big winners, their corrections they're more in that. That's the sort of correction you want to see. You want to see something tight, sideways, underneath the high for a while. You don't want to see these big V-shaped sell-offs and then go back and retest. This is not the ideal or the classic pattern. This is not what the leaders do. This is not what. If you look at the biggest movers in the past, what they do is they go back to the high and they congest under the high, and that's what you're looking. You're looking for that period there. You're not looking for this V-shape here. So this looks quite good here on the daily. But when I drill into my weekly, I think, oh, this is an overbalance of the trend. That's a bit negative. That's heavy selling there. Go back to retest the high. This could be, the volume's pretty light here. The only volume here is what, this week here.
Right at that high where you get the breakout traders.
So it can be that's not the classic pattern. So look, still might be bullish here. But that's just not the pattern that actually, 90% of the winners don't look like this. This might be the 5 or 10%, maybe look like this, but this is what 90% of the winners look like. They go back and retest the high, they congest under there for a period of time, and then they go. So yeah, so both those stocks are actually breaking out to new highs, which is pretty interesting, but definitely a slight difference in those two. I think the MAD looks more interesting here. That's been, sort of congested. Look at that period there, Chris. Sort of congested under that high there. Pull back in here, tighten up, big, almost VCP in there as well. And then once it surges through there, bang.
And that pullback doesn't have too much volume, does it?
No, that's right. Yeah, and it's not V-shaped too. It hasn't really gone through and gone back up again, so it's been more measured there. So the pullbacks have been a lot smaller there. So that's the better looking. That's the better looking trend. That's the difference between the good patterns and the best patterns is sort of they congest under the high there. So that's what we want to sort of look for. Let me move on here. So the other one there was BTH was number 17 there on the list.
It's come up a few times before that one.
Yeah, this is interesting here. Obviously, look, still a pretty decent downtrend here, but this is in the sector, which is getting some traction here. This is a decent pullback. Okay, had a bit of a rally here. Pullback. This is probably getting smaller. Now we've rallied again. We're waiting for another pullback here. So this is starting to sort of see maybe VCP sort of style here. Got a bit of volume through here too, Chris. All the volume all through there.
Yeah, okay.
Definitely saw a little bit of exhaustive volume, at these lows here. So I saw definitely a bit of chunky volume coming at the last low here. More volume again here. Reasonable volume through here. And what do we see on this pullback here?
Yeah,
Well, that-
lightens up, doesn't really thin days in
No,
there.
no real volume through here. So a bit of volume start to come in at the low here. Some decent volume days again, some decent volume coming in again here. And now we've started to what, the last 3 days here? No volume here. So this is sort of a pattern to watch here. So it's not no sort of swing high broken. So we can't trade this yet, but this has got the makings of a sort of a bigger VCP pattern, and we've got the volume structure starting to build here as well. So might be early days here. So we're looking for the next leadership group here. So this is just sort of one to, for me, this sort of goes on my radar. It's the one to keep an eye on there because it's a good sector. The pricing structure is already starting to sort of set up here. It's just a bit early. So it'd be nice to sort of see this sort of come back here, maybe come back to the 50-day moving average, just sit on top of there, see no volume, start to climb, start to see something impulsive. And then once we start to break a swing high, then it might be sort of something to go. So just, that's early, but it could be, you know, could be a pattern to sort of watch here. That's the sort of stuff I'm trying to look for here. 360 was number 11 on the list. Look, the stocks had a bit of outperformance there, sort of one that we highlighted previously. Still holding up pretty well, not showing too much weakness here, considering the Nasdaq's showing real weakness. This stock has held up pretty well here, so that's showing some relative strength here still. So showed relative strength out of the low, showed relative strength on that correction. It was pretty mild. And even after this rally here, it's still showing relative strength. There hasn't really been much selling going on here. So stock's in a pretty strong position. So nothing wrong with that at all. PPS was one that we sort of highlighted last week. Had a little VCP, a little breakout. Still looks okay, but volume's starting to lighten off. So probably losing a little bit of momentum. WVT was sort of one that we highlighted last week. Maybe potentially being a little exhaustive in that high. Had a bit of a pullback here, but it sort of dried up here, the volume, which is good. Volume a little heavier on the pops here. That's kind of constructive there, but still a bit of a struggle here. So finding that one a little bit, maybe too hard here at the moment. AIZ there, which is sort of one that I've been long. That's had a pretty good run here. It's just starting to look a little tight here. It's just sort of, I still think there's, I think it's sort of gone through this level here, which I think is a good sign. Look at all the breathers in here. They're all nice and tight here. So every time it's sort of been, it's been good volume on the run, tightens up, no volume on the pullback, good volume on the run, tightens up on the pullback, good volume on the run, tightens up on the pullback. So just showing a little bit of you know, good sort of strength there. So it's building slowly here, but yeah, I sort of like what I'm seeing here. I think on the I think around 82 cents is a bit of a weekly level to keep an eye on. So but yeah, that's that still looks pretty good. Coronado was on the list there. Had a bit of a three-way pullback and then it has bounced again here, but not sure. I don't really, some of the other sort of coal sectors sort of starting to look a little shaky to me. So this was always going to be a bit of a short term for me, but look, still looks relatively robust here. Just not sure I'll be chasing it, sort of going back to the high here. So what else we got there? RUL. This is sort of one actually. Yeah, nice little VCP in here too. Obviously, look at that sort of pullback there. So this is sort of what we're looking for in that BTH, is to sort of pull back in here, and then, you know, have a little bounce, a little other congestion there, and then we finally break through. So once we sort of, you know, started to break above those little highs in here, breaking above the second high there. Yeah, so this is kind of, you know, pretty interesting actually. So it's had a nice move already, a little thin. But yeah, breaking above that high there would have been a good sign there. So see, again, look how that little throwback there. So basically you get your breakout, everyone buys it. Within a 1 or 2 days, snap back just to, you know, what do they say? Flush out the weak hands, what they call it, you know?
Yeah.
See who's got diamond hands, as the Bitcoin guys refer to it. But yeah, that's the classic thing, is that these sort of breakouts, they will do this little throwback here sometimes. So I find that, you know, it's sort of, me personally, I might get a little starting position, a little throwback, and then I see don't see, you know, because look at that. Yeah,
no volume, no volume.
No volume. So you sort of see that little throwback there, sort of scare you out, but there's no selling in there. So that will give you confidence to sort of, you know, scale yourself up. So yeah, that's what That's what you're looking for. PLS is sort of been on the list for a while, but I just, again, don't like the fact that we're sort of starting to, got this overlapping top here. Been a strong trend up into the high now, sort of starting to overlap. So just a few in the sector starting to sort of correct. So I'd just be careful about those ones there. NUF was interesting here because this is obviously just breaking out, which is sort of, you normally think, oh, this is pretty positive there. But think about this. This is a big sideways move following a down move. So this is impulsive on the way down, and this has gone sideways. So I just don't like to sort of see, if you look at the weekly on this, you'll see this is a downtrend followed by a sideways move. So that's just not sort of, what you want to sort of see. It's not sort of how classic sort of lows sort of form there. So yeah, just sort of aware of that. That's sort of not the best looking pattern now. I think GrainCorp was on the weekly list as well, which was might be sort of something similar as well. Again, yeah, all that, say sort of impulsive sort of down and then gone sideways here. And this sort of, every time it goes up in that range here, it's been sort of sold off here. So even up here, we've sort of got, got okay volume here, but we also got okay volume, solid volume here. So just don't like to sort of see sideways moves following, because normally if you have an impulsive move, this is impulsive, this is what they call corrective. So impulsive as in, moving easily, and this is moving sideways. So normally when you get a corrective sideways moving trend, it'll normally break in favor of how it moved into that, the direction that it moved into that side. Yeah, so this moved down, then gone sideways. Normally they move in favor of the original, the previous move into it. So just got to be aware of both of those two. NVX was sort of, it's been on the list the last couple of weeks. Sort of watching this one here. It's sort of it's looks popped out of the range here. Some good volume there. Sort of pulled back and tightened up here. So definitely sort of keeping an eye on this one. It's getting a little messy in here now, but yeah, definitely one to watch here as well. Just
well, if we just contrast on that one for a second, Gary. So before you were talking about the two ag stocks, Nufarm and GrainCorp, sort of impulsive down and then sort of corrective across in time. How was NVX with that impulsive down coming from 12 down to 6, bit of a rally, 6 down to 3, and then sort of trawling out that bottom? Yeah. How do you view that? Is it a bit different to those two, GrainCorp and Nufarm? Yeah,
so just look at this chart here of NVX. You see that's impulsive on the way down. This is sideways because it's overlapping, and then impulsive all the way down. So this keeps basically just sitting, leaving space here all the way down here, and then we start rallying here. It's overlapping, and then bloody impulsive again. So leaving space between the lows and the previous highs, that lows and the previous highs, that lows and no highs in here. So look at this. This is a weak trend as well. It's overlapping in nature. So just sitting. It doesn't sit on top. It basically flashes back in again. So it's a weak. This is what we call a corrective trend. Then move down here. So this is weak all the way down here. And we've gone back down here. So this is different here because two things. We've got big volume here, which is interesting, and obviously this is a bit impulsive. Actually, it's actually moved up reasonably quickly. Hasn't sort of done the, done this sort of sidewaysy sort of move. It's actually done something impulsive. I know it looks sort of small here, still sort of small.
Percentage is huge.
Yeah, percentage is big, but also just the fact that there's sort of volume in there and that it is sort of impulsive. And the one thing here, I mean, look at, once this has gone sideways, it's normally gone straight down, gone sideways and then gone straight down, sideways, straight down, sideways, straight down. We've gone up here, and what are we doing here now?
Sideways.
We're not really doing we haven't stopped being impulsive here. So this is a change in character. This is a change in character as well. So something's changed in here. So that's why we're watching this one, because we've seen some, the biggest volume of the year has come in the last, week or two off the lows. So that's interesting. And then this pullback here, this is corrective. This is more of a, this is taking a while to get down here. So it's a definite change in character there. I probably would like to have seen more of a tighter sideways move and come back less deeper. But you got to think now, this, if you looked at that there, it's probably from the low, that's probably only about a third of the range. It's not probably, wouldn't be 38.2. Fib, it would be probably about a third. So that stayed pretty tight in here. So we can hold here and the volume dry up here. You're looking for a bit of volume to come back in and drive it up here. It's just, look, that's a risky stock. It's still in a strong downtrend here, but a definite change of character taking place at the lows there. So that's why, that's why I'm just watching it. I haven't traded that one there, but I just, when you see how big a move that stock had previously and how big a decline it has, if there's a change in character, then that's one that can move it. And we saw obviously with 360 how quickly 360 move once they've got a change of character. Last one on the list there was Qantas there, so it's still pretty, it's gone to a new high here. Still pretty firm here. That travel sector's been pretty robust there, so pull back on pretty light volume there. Gone back up to retest the higher and sort of follow through here. Might just be having a bit of a breather. Nothing negative there. I think there was a couple on the list last week. Was it A11 there, which we sort of saw had a bigger pop there. I thought this was interesting here because I think this was on our list, our weekly list. And although IPOs are hard to trade, you still get the same patterns there. You still get your little VCP patterns there, and you wouldn't touch these until they break above a little swing high there. So see how it sort of broke out here. Look, gee, they have some big moves. So, some guys do look at. We need to be sort of looking, because this obviously a bear market has sort of gone through. It's taken place here for the last 9 months. That we know that the next leaders aren't going to be the same as the previous ones. So all the FANG stocks are still getting murdered here, while the market's there's some stocks that are actually going to new highs. FANGs are going to new lows. So there should be new leaders emerging here. So they should be new stocks. So we should be looking amongst sort of some of the new IPOs. And it's not, you got to remember, it's hard to raise money, hard to get to market when you're in a bear market. So only the best stocks actually get to market, if that makes sense. And so some of the stocks that have been floated for the last year might have had some troubles there, but they might have held up quite well. So you're looking for your sort of leaders in there. So there will be some IPOs worth looking at there, but that's sort of, you still want to look for the same setups here at least, So that's the minimum setup issue. Sort of want to see a little congestion pull back and then breaking above a little swing high there. That's the earliest thing I'd look at there. So, whereas I think the other one that was on the list there, WA1 there, that had a little pop as well, some good volume there. But I think that, after it raised, the share price, went up 4 or 5 times in 4 or 5 days. They raised some capital there, which is always a risk with some of these small new stocks there. But that's our quarterly list there. So there's plenty happening in there. In our sort of daily list there, New Hera was number 1. Now, look, the volumes are still pretty light here. I do know this stock actually, reasonably well. I went out and saw a company presentation there, I know years ago when they first floated. I've got my doubts about this company just because I thought they were a little spivvy, but yeah, they still got technology there, which is interesting, but probably too small for me. But yeah, no, it's probably one to keep an eye on. I won't say anything too more negative, or that's just I'm a little biased in my opinion there, but the other one too, Perpetual, yeah, again, a little biased to this one as well. This has popped here because Regal and another sort of private equity group talked about making a bid for Perpetual at $30. It's like a really small firm bidding for a big firm. It doesn't make sense to me how they can, Regal fitting into Perpetual. That doesn't make sense to me either for some reason. So yeah, and it's not our it's not a real bid. It's our what's
non-binding.
Non-binding. That's our favourite non-obligation. So it's sort of like it's like an American option. You get the right with no obligation there. So yeah, so a lot of these non-binding bids, they just don't work out a lot of the time. So yeah, Perpetual's not going to go at 30. So Perpetual's trying to buy Pendal. So that's all interesting there as well. The whole whole dynamic of all that. So but yeah, I can't sort of see how Regal will take Perpetual. Just doesn't make sense to me. But so I think I'm not sure I'd be following this one here. I think I'd be careful about that one. RMS is, this is sort of one actually we talked about last week. Actually, it's one of the sort of gold stocks there. I quite like this because I had this in my report actually, just because it made a little false break down there, Chris, and some okay volume in there. Nice little tight little pattern as well. So unfortunately for me, I traded a few other gold stocks. One of those is okay, one of those are not okay. This one would have been much better than the other two that I chosen. So, but yeah, so it's had a bit of a breather here now. Might suggest a bit, but yeah, it's a fascinating gold here. Really, sort of some of the stocks have been sort of showing a little bit of strength here recently. Some of them are sort of still lagging. So, gold itself is sort of still stuck here for me. But yeah, just sort of keep thinking we're going to get a big, something decent in gold, but it hasn't happened here so far. Sort of think I've sort of been stopped out. Position in a few stocks, had a nice move in my favor, got to break even and got knocked out 3 times now for quite a few positions. I've still got a small position on, but yeah, just one of those stocks, just one of those sectors that should be performing and hasn't. But that's why we've got to use risk and risk management there, because sometimes they don't do what they should do. So risk is always the most important thing. Yeah, so it's all about sort of managing money there. So don't manage your ego, as they say. So VSL is actually pretty interesting. That's sort of pretty tight, sort of sideways move here in that sort of steel sector. But I like the fact that this is fairly corrective here so far. In a pretty weak market, much of this has moved down here. It's actually held on pretty well. So probably one stock to keep an eye on here, actually, just because it's showing relative strength in a pretty negative market. So that looks interesting. SPQ is like I said, an explorer here, so a little bit risky around the 6 cents. A little bit of a BCP tightening pattern in there, but again, probably too small for me. Being a sort of mining explorer too, leaves a lot of risk there for me. So probably not one I prefer. Homeco is sort of a bigger stock here. One that I think is kind of interesting here, just because this has been a bit of a downtrend here, but this is overlapping. It's not really corrective. So this has been trending down for a while. Look how impulsive those legs down. This now is struggling to go down, isn't it? So
it's almost hasn't come back to retest that low yet, has it?
No, it hasn't come back. It's actually sort of stayed just above it there, but it's now sort of popped up into the range as well. So it's broken above our 50-day moving average. Some okay volume in here without being super. But yeah, so possible change of character this one. The thing that most interesting with this stock is the weekly setup here, is that this is sort of, bounced up here, and then this is a down move here. But if you sort of had your channel in there, you sort of see this is broken out this week, but it hasn't kicked on here yet so far. So this is one that I am keep an eye on there, because obviously Homeco, you can see, it had a pretty good run there sort of through the last couple of years. It's had a pretty healthy correction now, at $8.50 down to almost $4. So it's literally halved in price. Yeah, if I'm not mistaken, that's all the sort of it's all your sort of homemaker stores, and that's all the leases around that. So yeah, so it's had a decent sort of growth and a rollout of their business there. So it's been pretty robust, this business. So but yeah, definitely kind of one to keep an eye on there, just because it looks like a change of character there. But yeah, just needs to show a little bit more here. But yeah, this one that it could get going here soon. Just needs to show a little bit more. RPL is that's Regal. So I don't know when they've, it's I wouldn't be chasing this one. So that's all I'll say.
They're trying to spend some money, aren't they?
Yeah. I mean, it's like I don't know. I don't know how you compare them. It's sort of, it'd be, I don't know. It'd be like some little, regional chocolate company trying to take over Nestle or something. It's sort of, yeah. It's they're a bit small. Look, Regal's been around a bit. Regal's had a few slaps on the wrist for doing naughty things over the time as well. But yeah, there's a bit of size to Regal, but not compared to Perpetual. Just doesn't sort of fit too. It's sort of, they're different type of fund managers. So yeah, Regal's pretty aggressive. Perpetual's sort of quite old school. So yeah, I don't know. It just doesn't sort of fit either way. Look at it. Hey, a couple that I really did catch my eye here on this list here, Chris, was Pepper Money was one here. again, just I know we've got a downtrend here, still no swing high broken there, but this is sort of, you know, starting to get a bit corrective in here now. So had a chance to sort of go down, hasn't sort of gone down here, starting to sort of pop up here. If we can break above there, that'll look pretty constructive there. So that's sort of, yeah, look how tight that is in there so far. But yeah, the daily, I just noticed, just noticed a little break here. I think it might have gone 158.5 there. So yeah, 159. So it's gone slightly above that by 0.5%, which is not much. Not a lot of volume in here so far, but just thought it was pretty interesting there because some of these sort of smaller, we've seen some of the smaller tech. This is obviously in the fintech sort of space here. But yeah, some of the smaller players are getting sort of mopped up here. So just going to keep an eye on some of these sort of smaller quality names. But just like the fact that this has taken a while to get down here, can't get going, starting to pop up here. I'd like to see a break above that level. Something a bit more meaningful volume-wise, but that looks interesting. And the next one, Judo, this one probably looks more interesting here. Because it has sort of had a, there is some volume sort of through here. There's a bit of, all of a sudden just starting to see a few volume lines come through here. And again, this is a pretty strong downtrend here, but just broken above a swing high in there. Bit of a sideways congestion there, nice and tight. And then just starting to break out here. So it's showing weakness today here, but showing a bit of volume coming through in here. So just interesting, those couple there. They're both sort of in that fintech space as well. We've just seen a few of the smaller tech companies get taken over here. So yeah, just definitely a couple to watch in there. Obviously, the banking space has had a pretty good recovery there. So you're seeing the big banks have bounced pretty strong. Regionals have bounced there. So probably just keep an eye on those sort of smaller financials. Judo Bank obviously is the one in there. So definitely worth keeping an eye on those. Temple & Webster is showing some relative strength here, Chris. It's sort of in a bit of a sideways grind here at the moment. But yeah, it's kind of constructive here. So again, with, okay volumes through here. I mean, it's some good volumes all the way up to the high. Been pretty light.
Holding those higher lows, hasn't it?
Yeah, just been holding nice and tight here. So it's sort of holding this sort of 5 to 6 range here. So this is sort of one to just keep on the list here because it's sort of, sounds funny here, but sort of, if it can sort of stay in this little sideways range for a bit longer there, use up a bit of time, stay nice and tight, and then when it kicks through, that's when then they can go. So it's definitely one to sort of keep an eye on pretty closely there. FID, again, in that sort of financial sector there, had a nice little, probably more of an exhaustion of the lows, some big volume, bit of a bounce there. So pretty early here, pretty strong downtrend. So probably too early to be looking at it, but just was on the list. CAE was sort of interesting, starting to kick out here. Volume's a bit light here, so not really, not showing super strength there. What was on the list there was Collins Foods, so it's had a nice little move. Actually, sometimes you can see these little VCPs, in here. See that little, one move in here, second there. Sometimes you can see this, even just like for small moves as well. I think GMG Goodman's might have had the same thing in there. See, like a little pullback in here, and a second pullback in here, and then another little tight range, and then it's popped here. So, but then it's come back. So you still get these little VCP patterns, even in some of these smaller setups there. But obviously the bigger ones are the better ones, and using up more time. Car sales on the list. Aussie Broadband is sort of one that I'll keep an eye on, just because that's sort of broken above the 50-day moving average. There's a bit of volume in here the last couple of weeks. Still pretty strong downtrend, so still pretty negative there overall, but starting to sort of see something there. So if we can sort of congest here, maybe do a little bit of a sideways move, just sort of one that's we should keep an eye on. IMM, again in that sort of interesting sector there, but pretty too small for me. The one that does actually really, this is sort of CPU is really interesting to me because sort of this is the classic VCP, and this is so this is we're in obviously been in a pretty strong bear market. Look how, this stock has just stayed strong the whole time here. So had a pullback, gone back to retest the high here, had a pullback, gone back to retest the high. So each correction is getting smaller. So, high, low, high, low, high, low. So but hasn't broken a swing line. The whole thing is just sort of tightening up here. So if you look at our weekly there, we can just sort of see how this thing's just tightening up underneath the high there. So I thought when I saw this false break here, Chris, I thought, oh, that's a bit negative. And it did flash down, but it didn't didn't take out the target there. But then it's come straight back up to the high and then congested. I thought, oh, that's not what false breaks normally sort of do. So that's sort of been building quite nicely there. So this is actually one that in terms of people sort of asking about how to position and how to scale up here. So I think it was a 28th or something there. I sort of bought roughly around about I think it might have been 10% of my portfolio. Might have been, was it 28th? So I think I bought a parcel around 24.70. That was my starting parcel there. So I might just sort of buy roughly around 8 to 10%, whatever the rules are, and then I've got my stop at obviously as per my risk per capital, and then we've sort of got a nice gap up there, which is a bit of confirmation that this is this is tightening up here. Look at look
This
how
is 5 or 6 days there where they're tight closes, tight opens. It's really narrowed the ranges.
Yeah. And the market was pretty weak in this period as well. And we're showing, we're just not selling off here. So I thought this looked pretty good. So I just thought I'd get a starting position in here, and this is what I look at. And then in terms of sort of scaling up, the easiest way you don't want to be sort of it's called scaling up because it's not scaling down. It's not averaging down. So we're adding to a winning position. So how do we do that? We do that because we sort of want to get, I guess we want to sort of start with a small position. We only want to add to it once we're winning. If it starts losing, then we shouldn't be adding to it. Full stop. We have a risk in there. So we're basically risking, for me, I only risk 1% of my capital is the maximum. Usually I'm usually less than that. But that's my maximum. So when I sort of scale up, if I'm going to add to that position, so when we sort of got we did get a gap up on the 31st there, we want to be, that's a good sign there. We've actually just popped out of this congestion there and popped up impulsively, sort of that range there. So I think I've added to my position there. I think another sort of 7% or something there. So I've ended up with roughly about 17% of my portfolio. I think 25.12 is probably around the mid price of that bar for the day, just because I like what I was sort of seeing there. And then most importantly, the reason I sort of scaled up there is obviously one, it's a winning position, but now I just have to make sure my risk is still at 1%. So even though my position has gone from 10% to say 17% of my portfolio, I still have to manage my risk exactly the same. So now I really should be moving the stop up on the whole lot, or at least basically, sometimes you might have, you can move together the whole position. So you can basically sort of move the stop up to, your 1% of your capital.
So you kind of average the two positions, the stop for the two positions.
Yeah. Well, I was going to say I do this. Most times I do the whole lot, but sometimes I might actually break up the position. So sometimes actually having your stop in two different positions is good, because sometimes you can flash back, then you're going to get stopped out of half position. You still keep your long on. But yeah, if you can basically sort of add your new position on, and then you have a stop which is sort of within your 1% in total, then that's fine there. So the main thing is just operating within your rules. So if your rules are sort of okay, my maximum position size is this. If I'm in a positive market, my starting size is say 10%, and I can go up to 20% maximum. If that's your rules. If I'm in a negative market, I want to start with say 8, and then maybe add another 7 or something there. Your risk parameters, you have definite rules around your risk. So I've got my sort of rules is 1% of my capital. So I've got a spreadsheet with all my positions, all my capital, and it works it out what my maximum risk is. So I can never go over the risk per trade, and I measure that as not. I don't measure that as 2 trades for Computershare. I measure that as 1 trade, because that's still 1 position. So my risk should be no more than 1% for the whole lot there. So it might be I'm potentially if I can't add to that position and my stop can't stay the same, I might move it up, or maybe I just add to it a little bit less, and then leave one where it is, move the other one a bit higher. So there's no sort of probably right or wrong answer there. The main thing is we just have to. It's all risk and reward, so you just have to follow your rules there, follow your plan.
On your plan there on the entry for your first position, you've got there on the cursor. Maybe if we can just get rid of that little box down the bottom on the volume bars.
Yeah.
On your first entry around that 2450, 2475 area where it's congesting, where's the most appealing place for you to put a stop for that first 10% or 8% position?
Yes, I think I had my stop just sitting underneath this level. So it would have been, I can see here in my spreadsheet, my original stop was, I think it was this, it was under 23.95 for my original position. And then once I actually added to my position in here, then I moved my stop into below here. So currently, what was that? 24.38. So I think it was 24.36. Was sort of once I put the second position on, my stop on the whole position became 24.36. So that's, I like sort of, I don't like to sort of see swing lows getting broken, like a strong trend. So just don't break swing lows. We want to be in strong trends. So I know some people had questions around stops, whether you have them in or out. I have them in all the time. Yeah, so I wouldn't say I have them in all the time, because there's some stocks I don't. But majority, sort of 90% of the time, I'll have them in the market. And some people say, hey, look, people know where your stops are, and the brokers always push the stock there and they stock you out. That's only because everyone's usually positioned at the same place. So usually it's, see, either give yourself a bit of room. So if maybe it's going to come back a little bit. That's why, I sat back here. Originally, my stop would have been at under 23.95, a few cents below, give myself a little bit of room. And here, I might be a couple of cents below this, give myself a little bit of room. But still, we don't want to see lows getting broken here. That's not what we want to see. So that might be where everyone's sort of, moving, but that's the way you're going to go. I mean, the beauty is here. I mean, I've sort of scoured into a lot of positions here over the last few weeks, and it had, probably 5 or 6% risk capital. And with the market moving up here, I've just sort of tried to move my stops up here. So at the moment, I've sort of gone from having, roughly 5% risk on board to now having 0.78% risk. So less than 1% risk here, because I've sort of managed to get like 4 or 5 of my positions to break even or above. And some of the others have moved up a little bit just because I've sort of seen, So now I'm, if the market turns down this afternoon, something really negative happens and the market gets sold off pretty aggressively, then I'll know at the end of the day I've lost, I'll be totally in cash all across all those positions. I'll have lost, certain amount of dollars, which is pretty small of my capital. So less than 1% of my capital.
0.78%, yeah.
Yeah, and then so it's not that much for me. And I'm like, okay, well, then I'll be in cash and I'll be fine. I'll be there to fight another day as a trader. The main thing is to manage your risk. We're in here for the long term. We're not here for the be a hero tomorrow. Sort of, you've really got to respect your risk and stuff like that. So that's the most important thing. Is just it's when you sort of. So when you forget that, so I was listening to a trading podcast this morning, Chris, actually around Mark Douglas's book, sort of Trading in the Zone, and sort of talked about, like in today's age, we give out participation awards for coming 8th. The market doesn't give out participation awards for coming 8th. The market is, it measures winners and losers, and there's no medals for coming 2nd, 3rd, or 8th and stuff like that. If you're not winning, you're going to get,
If you're not winning, you're financing the winner.
Yeah, and if you have this sort of sense of entitlement or sense of about the market, it'll slap you. You're coming 8th. You're not going to get a participation award for coming 8th. You're going to get slapped in this market. You're going to get slapped financially, and you're going to get humbled really quickly. So you have to preserve that capital. That's just imperative. So No one's entitled to anything in the market. Can't blame the market for any market moves. It's this stock did this or this did that. You have to follow your rules. It's all come down to you. So have to manage your risk, manage your positions, take responsibility for every single trade that you've got. It's up to you. So you can go as hard or as light. You have to build a methodology, and you just have to sort of follow it. It's really come down to you. So you just have to take ownership of everything you've got here. If you understand your risk, if you know what, every day I go to bed every night, I know what my risk is or my positions, I know what my downside is. I can comfortably sleep every night knowing what my worst case scenario is. As long as you're comfortable with the risk you've got on board, you know what it is, that's fine. That's the way it should be.
Well, they're really good insights on the portfolios, and they were good questions that came through. So it's
definitely
good to explore them. And thank you for going into detail on how you're managing positions you've currently got on the market. So probably on that note, we might say it's a good wrap for today. Thank you for the insights. And for those who are asking questions, if they do have questions, we're going to try pick one or two of them each week and go through them. So if you've got questions, leave them in the comments below and we'll try get to them. And Gary's mentioned a few trading strategies throughout this: VCPs, false breaks, which can be sometimes look like springs, some strong rallies, it can be high tight flags. They're all on the right hand side. There's a whole series of those where we go through in detail. And then also right here on screen, Gary's got Computershare, which is a trade that he's put in his portfolios. So when you're looking at how he's running his portfolios, there's a weekly update, and that playlist is also on the right hand side. So with that, we're going to say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.